everyone. Joe DeBrita here from the JMRD Watson Wealth Management team. Just back again to report on a quarterly portfolio update. If you remember, this is something that we've been trying to do over the last couple quarters, and we're glad that you're taking some time to watch this video, and we're excited to talk about one of our portfolios. So I'm joined today by Drew Beckett, who works with me in the London office, and Zach Davidson out of Toronto. Let's get right into it here, Drew, if you want to go ahead.
As mentioned, we're doing an update on what were formerly referred to as our JMRD Watson baskets, and we introduced the name change 2 weeks ago in our Market Observer. And this week, we will be providing an update on our JMRD Watson U.S. Growth Private Portfolio. Not a big name change there. That was the former JMRD Watson U.S. Growth basket. So without further ado, we'll hop right into some questions that we'll be asking Portfolio Manager Zach Davidson about U.S. markets and about some of the changes that were made this quarter in the U.S. growth portfolio. All right, so for the first question, if you just want to give us an update, Zach, on kind of how U.S. markets performed in the first half of 2021 and in Q2.
Thanks, Drew. So it was a very strong first half of the year for U.S. markets, as many won't be surprised to hear. The S&P was up 14.4% in the first half. The Dow was up just under 13%, and the NASDAQ as well was also up 12.5% for the first half of the year. What is interesting to note is that there was a difference between the first and the second quarters. We saw a lot of value and cyclical type companies had a very strong first quarter of the year, and that helped the Dow, which had a huge outperformance in the first quarter of the year. And then in the second quarter and more towards the second half of the second quarter, the technology stocks really started to pick things up a little bit. So in the second quarter, the Dow was up 2.6%, still a very healthy return in a typical year. The S&P was up 6.9% in the second quarter, and the NASDAQ index was up 7.6%, leading the three indexes in the second quarter of the year. As far as sector performance, the big outperformer in the US this year was the energy sector. Unlike Canada, energy is a very small weight. In the S&P index, it's only a couple points weight in the index, so it doesn't have as much of an impact, but the US energy sector was up 45% in the first half this year, so a very strong rebound in energy. The financial sector had a great performance as well in the US. It was up 25.5% in the first half, followed by real estate, and communication sector as well had a great performance. It was up 23%. And that communication sector in the US does include Facebook and Alphabet, which are 34% of the communication sector, so they had a big impact there in the first half this year. The technology sector of note, as mentioned, was up 14%, so a very good first half, but it was not as big a factor as far as the index is overall. And the laggards, not surprising, the utility sector, which was positive, but up 3%, and the consumer staples sector, more of a defensive sector, was up 5% this year. So we really saw the economically sensitive companies outperform in the first half of this year. And just to note, as far as the change in the second quarter, real estate was up 13%. The technology sector was up 11%. And again, the laggards in the second quarter were the consumer staples and utilities, which were slightly negative in the US in the second quarter of the year.
Thanks for that, Zach. That was a great update on the US markets. I always enjoy hearing your thoughts and the conversations we have. So just, I guess, question number 2 here. Can you provide an overview on the U.S. growth private portfolio and how it's performed year to date, and maybe touch on quarter 2 here as well?
So the U.S. growth portfolio was up 14.8% for the year, full year as of end of June. However, it was a tale of two quarters. In the second quarter, it was a strong performance. April was a terrific month, and so the basket was up 12.9% for the second quarter after more of a muted gain in the first quarter. Just not surprisingly, the basket had a very strong return in 2020. It was up 22%. And then the portfolio had a quieter performance in the first quarter, followed up by the return in the second quarter. And then as well for an annualized 5-year performance at the end of June, the private portfolio was up 19.96%, which was ahead of the S&P for 5 years as of the end of June, which was 17.65%.
All right, well, thanks for that, Zach. Moving on to the next question. If you wanted just to touch on some of the leaders in the portfolio and some of the laggards this quarter, and then sort of go through the transactions that were made and, highlight some of the changes that were made in the basket this quarter and perhaps the reasoning why those changes were made.
Thanks, Drew. So the top performers in the quarter were NVIDIA, which was up nearly 50%. The company benefited from the global shortage in semiconductor chips. They're one of the leaders in the graphics and semiconductor market in the world. The shares have done very well this year and had a great quarter in the second quarter. The second best performer this year was MSCI, which is also the largest holding in the fund. Shares have continued to perform very well. It was up 27% in the second quarter. The third performer was UPS, United Parcel Service, which is up 23%. They had a great quarterly earnings in the second quarter, and the shares popped to new highs. That's a newer position that we added this year. And then Target was the fourth best performer so far. At least in the quarter, was up 22%. The company's just continued to perform very well, has transitioned very well to online and e-commerce, which is benefiting their sales. The three laggards in the quarter were D.R. Horton, which was up 2%, Mohawk Industries, which was flat and is a newer position, and LPL Financial Advisors was down slightly in the second quarter. As far as new positions, we added 2 new positions. Simon Property Group, which is the largest owner of malls in the United States. They own 203 properties. They are a REIT, and as stores have reopened on the retail side, they've benefited this year. We also added West Rock Company, which is the second largest packaging company in the U.S. They're a global company as well, 14 billion market cap, over 50,000 employees, and that was a new position that we added to in the quarter. The 2 positions we exited in the second quarter were Edwards Life Science. While we owned that position, the shares were up 53% over the last couple of years. The relative strength had weakened, so we decided to exit that holding and stick to our discipline. We also sold Qualcomm for a small gain in the quarter, as the relative strength as well had weakened during the quarter. We trimmed a couple holdings. One was Apple, which was a big position in the private pool, and we sold half the Apple position as the shares really had been quiet for about 9 months until June. So we took some profits there, and stocks had a good rally since. It's up 16%, but we wanted to stick to our discipline, and as the shares had been pretty weak for a period of time. As well, MSCI, that was just the position that was the largest holding, so we just took down our position a little bit. It's continued to perform really well. We've owned MSCI for 5 years. The shares are up 5-fold since we bought. And MSCI, they are a provider of index for equity, for fixed income, for hedge funds, licensed ETFs, and they've been a big beneficiary of ESG indexes. So often when you hear of a ESG index, the MSCI name is on that product. And so they've had a really huge year as far as revenue growth this year. The positions that we added to in the quarter, we added to Capital One, LPL Financial, D.R. Horton, UPS, and PayPal. Some very different sectors there. One big change this year overall in the basket has been the exposure to financials. Capital One credit card provider, LPL Financial, in the investment wealth management industry, Synchrony Financial as well, which was a newer position in Q1 and a lender. And so that's been a bit of a shift, that the technology weighting has gone down slightly and the financial exposure in the basket has increased, as much as we still have some big holdings in the tech sector. As mentioned, NVIDIA, Apple still outweight in the private pool portfolio, and Microsoft as well.
Thanks for that update, Zach. That was a great overview of the private portfolio, and I know all of our clients appreciate it. So again, thanks for taking some time out of your day to go through that with us. As a reminder, we are going to be doing more of these videos, and if you follow our YouTube channel, you can always go back and rewatch these videos or be notified as soon as a new one comes up. So I would just like to thank all of our clients for taking some time to join today. And as always, if you have any questions or comments or would like to learn more about our private portfolios, please reach out to a member of the team and we'll be more than happy to get back to you with some answers. So thanks so much and have a great day.